Imagine having to act as an internal organ for your child, like every time they eat or every time they go to sleep or even just, run out to play in the yard.
Yeah, you have to do this incredibly complex calculus just to keep them safe.
Right. You have to figure out exactly how much of a potentially lethal hormone to inject into their body. And if you miscalculate and give them too much, they could slip into a coma.
It's terrifying. And on the flip side, if you give too little over a long period of time, you're risking severe organ damage.
Exactly. And for decades, that immense, just terrifying cognitive burden has been the daily reality for anyone managing type 1 diabetes.
It is a relentless 24/7 job. The technology to deliver insulin has improved, sure, but the underlying requirement that the patient or their parent basically has to act as a human pancreas that has remained fundamentally unchanged for a very long time.
Well, today we are looking at a stack of documents from a commercial stage medical device company that's trying to rewrite that exact reality.
Yeah.
So welcome to today's deep dive.
Glad to be here. This is a fascinating one.
It really is. We are unpacking Beta Bionics today. Specifically, we're looking at their Q1 2026 earnings presentation, their press release, and their SEC 10Q filing. And all of these are dated April 21st, 2026.
Right, hot off the presses.
Yeah. And our mission for this deep dive is to explore that really interesting intersection of cutting-edge biotech and healthcare economics. So if you're someone who follows medical technology, or you study the business of healthcare, or you just love looking under the hood of how a company scales a disruptive idea, this one is definitely for you.
Oh, absolutely.
Because here's where it gets really interesting. We aren't just looking at a shiny new medical gadget today. We're examining a company that realized that having superior clinical technology means absolutely nothing if the economic model prevents people from actually getting it.
That is the core tension in modern medical technology right there. Innovation in the lab. That's really only the first step.
Yeah, it's like the starting line, not the finish line.
Exactly. And to understand what Beta Bionics is actually disrupting with their flagship product, which is called the iLet Bionic Pancreas, we kind of need to understand the structural friction of traditional diabetes management.
So let's talk about that friction.
Okay.
Because even with modern insulin pumps, the ones labeled as hybrid closed-loop systems, the manual input required from the patient is just staggering.
It really is.
I was reading up on this before we started, and the patients are constantly having to program in their basal rates, their insulin-to-carb ratios, and these correction factors. And honestly, if you're not immersed in this world, that just sounds like a bunch of medical jargon.
Right. It sounds like you need a medical degree just to eat lunch. Let me break those mechanisms down real quick because it really highlights the problem.
Yeah, please do.
So the basal rate is basically the slow, continuous drip of background insulin a person needs just to stay alive, and that fluctuates throughout the day. Then you have the insulin-to-carb ratio. This requires the patient to look at a plate of food, accurately guess how many grams of carbohydrates are in it, and then calculate the exact amount of insulin needed to metabolize that specific meal.
Which seems impossible to do perfectly every time.
It is. And then on top of that, a correction factor is the math you have to do when your blood sugar unexpectedly spikes. You have to calculate a microdose to bring it back down to a safe range without crashing.
Wow. So it's basically like flying a commercial plane manually through a storm.
That's a great way to put it.
Like you're constantly monitoring your altitude, the wind speed, the pitch, and you're making these mechanical adjustments every single second. And if you look away or if you miscalculate the headwinds, you crash.
That is a perfect analogy for the cognitive load. And the thing is, humans are not machines. We get tired, we miscalculate.
We get stressed, we get sick.
Exactly. And because of that complexity, a massive portion of the type 1 diabetic population suffers from suboptimal clinical outcomes. The burden is just too high to manage perfectly 24/7.
Which brings us to the iLet Bionic Pancreas. Reading through these Q1 documents, the thing that stood out to me is that what makes this device different isn't really the physical pump itself, it's the software.
Right, the magic is in the code.
Yeah. They use what they call adaptive closed-loop algorithms. So when a patient sets up the iLet, they don't enter a basal rate. They don't enter an insulin-to-carb ratio. The only piece of information the algorithm needs to initialize the only thing is the user's body weight.
Just their weight. And what's fascinating here is how the algorithm learns from that single data point.
How does it do that?
Well, once it's initialized with the body weight, it continuously ingests data from a separate wearable continuous glucose monitor, or CGM.
Okay, so it's constantly reading their levels.
Exactly. Every 5 minutes, it receives a new blood sugar reading. And the mathematical model inside the iLet uses that data to update its understanding of the patient's insulin sensitivity on the fly.
Oh, wow.
Yeah, it is essentially learning the patient's unique metabolism in real time and then autonomously determining and delivering every single microdose of insulin.
So you just hit the autopilot button.
Pretty much, yeah.
When you eat, you don't sit there and count carbs. You literally just tap a screen to tell the device if your meal is like smaller, typical, or larger than usual for you, and the algorithm just takes the wheel.
It drastically reduces that cognitive burden we were talking about. And we can see the market reacting to that in real time in this Q1 2026 report.
Oh, the numbers are wild.
Yeah. Beta Bionics noted that about 70% of their new patient starts in this quarter came from people who were previously using MDI.
MDI, meaning multiple daily injections, right?
Right, traditional shots.
That statistic stopped me in my tracks,
Mhm.
70%. Because think about who these people are. These are people who historically looked at traditional insulin pumps, they looked at the basal rates and the correction factors, and they decided they would rather manually inject themselves with a needle multiple times a day than deal with the complexity of a pump.
Yep. They looked at the math and said, no thanks.
Right. So the simplicity of the iLet is pulling in this massive, previously untapped demographic.
It's a game changer. The clinical superiority of the algorithm is clearly driving that demand. But kind of returning to your earlier point, high demand for an expensive medical device usually runs straight into the brick wall of the U.S. healthcare system.
Oh, absolutely. I mean, if you're listening to this and you're looking at your own insurance deductibles, you're probably wondering how Beta Bionics expects anyone to actually get this device without getting absolutely crushed by out-of-pocket maximums.
It's a very valid concern.
Which means we need to look at how they are radically changing their sales strategy.
Right. So in the medical device industry, insulin pumps have historically been channeled almost exclusively through durable medical equipment, or DME.
DME is a bureaucratic nightmare for patients.
Oh, it's awful.
You're dealing with strict prior authorizations, mountains of paperwork, and worst of all, massive upfront costs. Like a patient might be on the hook for thousands of dollars just to get the physical pump hardware before they even buy a single drop of insulin to put in it.
Yeah, the DME channel basically creates this structural financial wall. It doesn't matter how good your algorithm is, if the patient's insurance resets in January and they suddenly can't afford a $3,000 deductible for the hardware.
Exactly. It just sits on a shelf.
So to counter this, Beta Bionics is aggressively executing what they call a multi-channel reimbursement strategy. They are intentionally pushing a massive shift toward the pharmacy benefit plan channel.
The pharmacy channel. Okay, so instead of routing this through the convoluted medical equipment side of their insurance, a patient essentially treats the pump like a standard prescription, right? Like something they just pick up at a local pharmacy counter.
That's the idea, yeah.
And because of that, the upfront cost to get the actual iLet hardware is drastically reduced. Sometimes it's down to just a standard copay.
Which completely changes the accessibility.
It does. But looking at the filings, the ongoing costs for the single-use products,
Mm-hmm.
the insulin cartridges and the infusion sets that you have to swap out every few days, those are priced noticeably higher in the pharmacy channel than they are in DME.
That is the trade-off, yes.
Wait, I need to push back on this a little bit,
Yeah.
because what you were describing sounds exactly like the classic printer and ink strategy.
Okay, I see where you're going with this.
Like, tech companies will sell you a color printer at a loss for $50, and then they lock you into buying $80 ink cartridges for the rest of your life.
Right, the razor and blades model.
Exactly. So if Beta Bionics is doing the exact same thing with a life-saving medical device, I have to ask, is this actually better for the patient? Or is this just a really clever corporate maneuver to trap people into a high-margin recurring revenue stream?
That's a fair question. But I wouldn't call it trapping them purely for profit, because unlike a cheap desktop printer, this is a heavily regulated medical supply. This strategy is fundamentally about the democratization of access.
Oh, so.
Yes, financially, it is a razor and blades model, but consider the healthcare economics at play here. By removing that $3,000 upfront barrier, a patient who desperately needs better glycemic control can access life-changing technology today.
They don't have to save up for a year.
Exactly. And their out-of-pocket costs for those ongoing supplies in the pharmacy channel, they're generally structured to match standard monthly pharmacy copays, which actually makes it highly predictable for the family budget.
Okay, that makes sense. I see how lowering the barrier to entry democratizes the tech for the user. But Beta Bionics is a business. If they are subsidizing the expensive hardware up front, their margins must be taking an absolute beating initially.
Oh, they are.
So how is their CFO justifying that to investors?
Well, they do absorb negative gross margins right out of the gate on a per-patient basis in the pharmacy channel. But the underlying math actually validates the strategy over time. The filings show that by the third month of a user purchasing those single-use infusion sets, Beta Bionics crosses the threshold.
Month 3. Okay.
Yeah, right around month 3, they begin generating cumulative positive gross margin.
And since an insulin pump generally has, what, a 4-year expected lifespan before insurance will cover a replacement?
Roughly 4 years, yes.
So those remaining 45 months represent a highly profitable, recurring revenue stream for the company.
Exactly.
Okay, let's unpack this. If this printer and ink pharmacy shift is their grand strategy, we really need to look at the Q1 2026 scorecard to see if it's actually working in the real world.
And the numbers validate the strategy in a very striking way. Total net sales for the quarter hit $27.6 million.
Which is huge.
It is. That represents a 57% increase year over year. But the metric that really proves the thesis is the pharmacy channel growth. Pharmacy sales just exploded by 181%, hitting $10.7 million.
181%. That is a staggering acceleration for a single channel.
It really shows the demand. Pharmacy now accounts for 39% of their total net sales, and that's up from just 22% a year ago.
Wow.
And because they are scaling up production of those highly profitable ink cartridges, the single-use supplies, they are absorbing their fixed manufacturing costs much more efficiently.
Economies of scale kicking in.
Precisely. As a result, their overall gross margins jumped significantly to 59.5%. They're actually seeing so much momentum that they raised their full year 2026 revenue guidance to somewhere between $131 and $136 million.
Those top-line revenue numbers are just phenomenal. But I'm looking at their income statement right now, and something doesn't quite add up.
What's standing out to you?
Well, despite that 57% revenue growth, and despite sitting on a war chest of $239.5 million in cash and investments, they still posted a net loss of $21.9 million for this single quarter.
Yes. The cash burn?
They are bleeding cash. Where is all that money going if sales are booming?
So this is actually the textbook profile of a commercial stage med tech company that's transitioning from a startup to a major player.
Okay.
They are aggressively reinvesting their capital to capture market share right now, rather than just showing a short-term quarterly profit. And the two biggest line items in their expenses explain this strategy perfectly.
Let's hear them.
First, sales and marketing expenses hit $20.7 million for the quarter.
$20 million in 3 months. That implies they are building out a massive nationwide sales infrastructure.
They absolutely are. And strategically, they are building it to target primary care physicians, in addition to the traditional endocrinologists.
Oh, wow. That makes perfect sense.
Right.
Think about our airplane autopilot analogy from earlier. If you are selling a traditional pump that requires complex basal rates and carb ratios, you can really only sell that to an endocrinologist.
A highly specialized doctor.
Right. Because they're the only ones who have the clinical staff to spend 3 hours training a patient on the math.
Yeah.
A standard primary care doctor simply doesn't have the time or the specialized knowledge to manage that during a regular checkup.
Exactly.
But if the iLet only requires the patient's body weight, a primary care doctor can prescribe it in a standard 15-minute visit.
You've hit the nail on the head. By simplifying the technology, they have drastically expanded their total addressable market. They can now sell to the thousands and thousands of primary care clinics across the country.
But reaching all those clinics requires a deeply funded, really expansive sales force.
Which is exactly why they spent $20 million on it.
Okay, but throwing $20 million at a sales force implies you have a long-term vision with more than just one product to sell them. So let's look at the second massive expense. Research and development came in at $10.3 million.
Yep.
What exactly are they building next?
The R&D pipeline outlined in these SEC filings is very aggressive. First, they are actively running trials to expand the iLet's FDA clearance to include type 2 diabetes.
Which is a vastly larger patient population than type 1.
Vastly larger. They are also developing a tubeless patch pump that adheres directly to the skin, which removes the physical tether of infusion tubing.
Tubeless is a huge quality of life upgrade for patients,
Sure.
just not getting tangled up in wires.
Absolutely. But the initiative that really stands out in the 10Q is what they refer to as the holy grail of diabetes management.
The bihormonal system.
Yes. So the current iLet, like all commercial pumps on the market today, only delivers insulin. But this new system they are developing uses both insulin and a glucagon asset.
Right. And I saw they just paid a $3 million milestone to their partner, Sears Pharmaceuticals, for that glucagon formulation.
They did. And they are actually running phase 2A clinical trials in New Zealand right now.
So if we connect this to the bigger picture of human physiology,
Hmm.
the bihormonal system is a monumental leap forward.
It is.
Going back to our vehicle analogy, current insulin pumps, even the smartest ones with the absolute best algorithms, they only have brakes
Right.
because insulin lowers blood sugar. So if a patient's glucose spikes, the system applies the insulin brakes. But if their blood sugar drops dangerously low into hypoglycemia, the pump can only take its foot off the brake.
It stops delivering insulin and just waits.
Yeah, it just hopes the blood sugar naturally rises before the patient passes out. But the bihormonal system gives the vehicle both brakes and an accelerator.
Precisely. It can deliver insulin to lower glucose, and it can actively deliver glucagon to raise glucose. It is the closest clinical approximation to a truly artificial human pancreas ever conceptualized.
That sounds incredible. But reading the 10Q filing, there is a very sobering section that kind of grounds all of this optimism.
The regulatory reality.
Right, because you can't just build a biological accelerator and ship it to patients without the FDA looking over your shoulder.
And the FDA did a lot more than just look over their shoulder. In January 2026, Beta Bionics received an FDA warning letter.
An FDA warning letter. I mean, if I'm an investor, that phrase makes my blood run cold.
It is a very serious regulatory event. The letter stemmed from an inspection of their manufacturing facility in Irvine, California, back in June of 2025. And that inspection initially resulted in what's called a Form 483.
Let's break that down for a second. What exactly is a Form 483 in the context of the FDA?
So a Form 483 is essentially a formal list of observations made by an FDA investigator when they believe a facility's operations violate the Food, Drug, and Cosmetic Act.
Okay, so it's a list of things they're doing wrong.
Basically. In this case, the FDA cited deficiencies in Beta Bionics' quality management system, specifically concerning their protocols for medical device reporting and corrections and removals.
Medical device reporting. So we're talking about the paperwork trail here.
Yes.
Like, if a pump malfunctions or a patient reports an issue, the FDA wants to see a flawless, systematic process for how the company logs that complaint, investigates it, and reports it back to the government.
Exactly. Think about it. When you are dealing with a device that autonomously injects lethal hormones based on an algorithmic decision, the regulatory threshold for quality control is absolute.
There's zero room for error.
None. If there is a software glitch, the FDA needs to know the company has a bulletproof system to recall or patch the device immediately.
I see a line item in their Q1 financials where they spent $562,000 specifically on quality system remediation, which is essentially hiring outside consultants to overhaul their compliance protocols to satisfy the FDA. So, as someone who analyzes these markets, how do you view this? Is an FDA warning letter a fatal flaw in their operation, or is it just kind of the cost of doing business when scaling a medical startup?
I'd say it's an expensive, highly educational speed bump. It is actually quite common for rapidly growing medtech companies to experience severe growing pains with their quality management systems.
They outgrow their own paperwork.
Exactly.
Yeah.
The fact that they are aggressively spending $500,000 a quarter on remediation shows they understand the gravity of the situation, but it serves as a stark reminder. In the medical device sector, brilliant clinical science is heavily tethered to mundane regulatory compliance.
You cannot scale a life-saving device with sloppy paperwork.
You really can't.
So their compliance infrastructure has to be just as sophisticated and reliable as their closed-loop algorithm.
It does. If they want to get that bihormonal holy grail through FDA clearance anytime soon, their quality management system needs to be unimpeachable.
So what does this all mean for us? We've sifted through earnings reports, SEC filings, and pipeline projections today. And I think the story of Beta Bionics in Q1 2026 is basically a masterclass in modern healthcare strategy.
I would agree with that.
It proves that possessing a genius algorithm just isn't enough to change patient outcomes on its own. You have to actively tear down the economic barriers, like shifting to the pharmacy channel, to absorb that massive upfront cost for the patient.
Right.
You have to design the technology to be so simple that you bypass the bottleneck of specialized doctors, allowing primary care physicians to prescribe it. And on top of all that, you have to do all of it while surviving the unforgiving, strictly regulated landscape of the FDA.
It demonstrates that true medical innovation requires a perfect alignment of clinical science, behavioral economics, and rigorous compliance. If any one of those pillars fails, the technology never reaches the patient.
I want to leave you with the final thought to mull over. The iLet proves that an algorithm can continuously learn a person's metabolism and autonomously manage something as complex and dangerous as insulin dosing, right?
Yes.
So if we are crossing that threshold right now, what other complex chronic human conditions are on the verge of being outsourced to bionic software? And as these mathematical models get smarter and take on the entire cognitive load of managing our diseases, will our healthcare system eventually adapt to pay a premium for the software itself rather than just reimbursing companies for the plastic hardware it runs on?
This raises a really important question about the future valuation of medical technology. We may be moving toward a world where the code is recognized as the actual medicine.
It really makes you rethink what a medical device even is. Because sometimes the real revolution isn't the physical gadget. It's the math inside it and the economic shift required to get it into your hands. Thanks for joining us on this deep dive.